I think you have a more optimistic view of the United States than I do, or certainly than most of my guests do, that they're likely to pivot. Do you think that...
Because I'm just a tourist.
Yeah,
I'm just a tourist in the US. So it's like when you guys come to France, you have a very optimistic view of France. It's a lovely place to live. And I'm saying, I can't wait to leave. So
the narrative of institutional adoption is nothing new in the crypto space, but arguably no company has been there since the beginning, driving that narrative more than CoinShares, who has ETPs, electronically traded products, and has been servicing institutions from the very beginning. I talked to Jean-Marie Mognetti, the CEO of CoinShares, about what they're seeing now from institutions, what they're excited about moving forward, and of course, how much damage we saw in 2022 and what that means for regulation moving forward.
Let's go.
But CoinShares was started in Europe, correct?
CoinShares was born in Europe, yeah. But the funny stuff is, like, before CoinShares, the company was called Global Advisors. And Global Advisors was a community hedge fund with my two business partners, Danny Masters and Russell Newton. And it was originated from New York and London. So we have we were on the NYMEX floor in New York, and then we were in London. And in 2008, we moved to Jersey, the old one, not the new one.
Yeah. And so how have you found the difference between operating in the United States and operating in Europe, especially in context of everything that's happening now, this massive sort of uptick in rhetoric and regulation by enforcement?
It's funny because the US has always this kind of massive tech-driven, forward-looking kind of ethos in general. And in crypto, you have a lot of innovation which happened in the very early days in the US. Then the whole mining moved out of the US and was based in Asia mainly. And everybody was like, oh, the US are dead, everything's happening in Asia. And overnight, the US requalified as this kind of massive champion in mining. And nobody sees that coming at all. And yeah, right now there's a bit of I would say, riff-raff in the US around who is regulating what with the CFTC and the SEC. And you can see Europe kind of almost getting the act together with MiCA, the Swiss doing it pretty well. You can see Hong Kong doing some advanced stuff as well. And say, okay, well, maybe the US lost their mojo when it comes to being the innovator. But, even if they're a bit like the underdog at the moment on this regulatory framework, you may see them kind of requalify themselves very quick because, traditionally they have this capacity to move extremely fast and to turn the table at the speed people are not used to see. So, I wouldn't sell the US too quickly.
Yeah, but you talk about moving very fast. It seems that the only thing moving very fast is everyone in crypto out of the United States.
Yeah, look, it's a fair point. At the same time, what is very different than different innovation and or generation of innovator is like the crypto crowd is very, I would say, digital nomad-like, and they just don't have any possession or very little, I would say, possession in the world physical form. So taking a laptop and move away is a very simple form of expression, and voting with your feet become a reality. It's everybody is much younger as well, not being ageist. So there is no real string attached with family, school, and all this kind of stuff. So everything is like much more transient and can move from one continent to another at a very heavy pace.
Right. And with regulation, we're seeing a lot of that, right? This sort of concept of regulatory arbitrage. You hinted at the fact that MiCA is likely coming soon. Switzerland is somewhat friendly. Hong Kong was a bit surprising to me, right? And I guess that does show how fast you can pivot, because China was left for dead.
Yeah, you're right. But like Hong Kong is very surprising. But like I was in the SFC office in Hong Kong in 2018. And they were already kind of thinking about it and how to think about it from a security perspective. They were not thinking about it as a digital asset regulation framework. They were really looking at it as how do we make it fit within our security framework. And companies like OSL, who were there very, very early on, kind of plays a game to go through the all hoops of securities, and they have now built a lovely, I would say, market advantage in this town.
Yeah, I love Dave Chapman. We were in Dubai not long ago from OSL, and it is incredible what they've done. I just think there was that narrative that China was finished with crypto, right? I think if you looked under the hood, maybe that wasn't the case. There was still plenty of mining, but...
there is few stuff to look at in China. Mining is one thing. The other stuff is also what is a CNY kind of innovation framework, and we saw all the innovation in Shenzhen, all the I would say initiative around the Red Envelope Day, where they just like airdrop effectively eCNY through different shops in different wallets. That works extremely well, and then you get the extension of that to Silk Road. Not the old Silk Road, but like the Chinese project Silk Road of like all the influence project. And Hong Kong will remain the lab. Hong Kong is a fabulous lab to be able to push project out. So I think what you see on the contrary is like the SFC moving forward and the government in Hong Kong moving forward. I think is moving forward with some form of blessing, or at least I would say unsaid blessing from the central government in China. So it's quite interesting to see that something is happening there.
I think you have a more optimistic view of the United States than I do, or certainly than most of my guests do, that they're likely to pivot. Do you think that...
Because I'm just a tourist.
Yeah.
I'm just a tourist in the US. So it's like when you guys come to France, you have a very optimistic view of France. It's a lovely place to live, and I'm saying I can't wait to leave. So
yeah, and then you round the corner, and the torches are in the BlackRock offices, right? So yeah, so, I do understand that. I just think that there's a lot of, I guess, fear that this particular regime is not going to give us sensible regulation or guidance. I think everyone wants some sort of regulation, but I think more than anything, they just want clarity. What can we do? Yeah. What can't we do? What are these assets, right? And we don't have that at all here.
No, but it's going to come. And I think the CFTC taking over and like trying to push this narrative is like going in the right direction. Because if the CFTC win the argument, then it's going to make it very clear that it's falling under the CFTC regime, and then they can almost unroll the agenda. To some degree, you already had this little kind of fight between agencies. If you go back to the days where they launched ETF on oil and gold, the question was like the underlying is a commodity, the product is a security. So who is like overseeing that? And this kind of battle already happened in the past. So I'm quite interested to see what's going to happen with this old CFTC action right now, because that might be the start of the CFTC taking over effectively.
Do you have any major concerns that they're going after so many exchanges and platforms in the United States that it could actually be debilitating for the industry? Or do you think that people will just vote with their feet, as you said?
I think two things. I think people vote with their feet, and that's kind of a long established principle. But more importantly, I think a lot of when the whole debacle happened last time, I was in the US, and people were talking more about it outside of the US, not knowing what was happening, than people in the US. And the people who are operating big operations in the US, they just see it as a part of an operating expense, and they're like, okay, we're going to have to deal with that, and we're going to deal with it. And it's something, the relationship to that kind of problem from an American point of view is like, okay, well, that's another business item we have to deal with, and we're going to deal with it. And it's a very different approach, I think.
So you've obviously been on top of this for quite a while, right? You guys pivoted to crypto in 2013, exceptionally early.
Yeah. It makes us feel very old now.
Yeah, you're 10 years old in this industry. It was like 1,000.
It's like a Labrador. That's like golden retriever age. It's like 10 years in golden retriever is like dead. That's pretty much the same thing in crypto, where you get old very quickly.
Absolutely. So first of all, I guess let's talk about the history and why you identified this opportunity and were actually willing to go, wholesale into crypto. But then I want to know what's vastly different, if any of that premise or the reasons that you did it has changed, or if it's only sort of advanced and become more amplified.
I think like originally we were running out of the commodity cycle. The commodity super cycle was finishing, and our clients at the time were like, okay guys, can you do fixed income, can you do equity? And our knowledge was in commodity, and it was probably a short summary for us to think our knowledge was in commodity. Well, we end up discovering, once we returned the capital and doing a bit of work on ourselves and, a bit of introspection, that the reality was that we were really deep value investors and like really deep value investors. We invested in silver before it's even rallied. We invested in oil when it was $8, saying it will be worth $100. So there was like plenty of thematic we did in the past, which was kind of this deep value thematic. And we were like, okay, well, we're going to do something which is in the same vein. And we were proposed plenty of business opportunity. And one day we heard about Bitcoin, don't even pay attention. And we heard about it 6 months later and said, well, maybe we should look at it because it's twice in a row, maybe it means something. We look at it and right away with our trading eyes, we kind of almost love what we see on the chart, not even knowing what the technology was about. And effectively, the next 10 years of our journey has been almost like falling more and more in love with technology and how we can transform the way we are consuming financial services, but much more things as well. So we really came into it not through the technology angle, much more through the price action and the chart, I would say, and then kind of reverse engineer in the technology. And watching last night Ethereum merging was kind of a very poetic, I would say, moment in the history. You know, I kind of laugh about it because it takes the SEC 10 years to move the settlement time from T+2 to T+1. And it just took Joe Lubin and his team and the whole dev of the Ethereum Foundation, you know, I would say a long couple of years to get that done. And, you know, it's kind of a impressive event.
Your story echoes mine. I've told it a million times. I came in 2016, but just for the price action and trading. And it took a brutal bear market for me to convince myself that I actually cared about the technology, right? And then I obviously got orange pilled. But I think that there's a lot of people who sort of came in for money and then stayed for the technology. But you talk about sort of the disruption in financial services that's possible. Have you been encouraged by what you've seen over the past few years in that angle? How much did 2022 affect, you know, your view? Because we saw this sort of massive contagion and washout of a lot of the financial services side, right? Which were CEFI masquerading as crypto, but
you're right. So two things. I think you need to kind of separate a little bit who came to crypto, and I think if you look at the companies who are still alive and who are still fighting and believing in something, who are true believer, you really get the pre-2017 or pre-2018, I would say, crop and the post-2018 crop. And what's happening is like 2017 get this massive draft into crypto where plenty of people are arriving and the VC money is available and you get a lot of VC money injecting at that point. And if you look at the business who failed and who imploded or, you know, were done for alleged fraud, all these businesses are kind of like post-2018 businesses. Like the real business who were built for the right reason on the long-term view, not just with a simple idea and a simple mindset to make a quick buck, are still there and, you know, are still around. You know, I always use Bitfinex as its kind of crazy example. This guy built an incredible amount of infrastructure between Bitfinex, Tether, which can have this kind of pro and cons, but you know, they're still standing and they're still there. They're still trying to do their stuff and they don't make a lot of noise. They just keep moving and keep executing. You know, we can have philosophical discussion about how they're doing it, but what I'm trying to say is like, if you look at business like Bitstamp, Kraken, Coinbase, who were there in the early days, there's the one who just say, okay, we're going to build for the long term. We're not going to just try to overstretch ourselves or over accelerate. And yeah, sometimes it makes you a bit more boring than the last kid on the block. But that's because there is reason you are trying to execute on the long term.
Right. And I think that's a great summary of what's happened, certainly with centralized platforms. We've seen a lot of failures there, but you mentioned some of the big names that have just continued to build and continued to innovate slowly. But what do you think of DeFi at this point, right? I think that we had higher hopes, obviously, for TVL and usage and development by this point. But
so it's funny. I was like I was having lunch yesterday with like the founder of Maple, which is one of these lending platforms on DeFi, and we were talking about how we're seeing the future and where we're seeing the innovation coming from. And you know what needs to be remembered is like what we saw in DeFi in 2022, 2021 is not that much different than what we saw in the ICO frenzy in 2017 or 2018. You know, you get like one good ICO, which was effectively Ethereum in early 16, which starts opening the door for a ton of ICO. And same thing in DeFi, you get a few good projects in DeFi, which created a lot of copycat. And, you know, I think the history will remember that out of this first kind of DeFi, you know, push, you get some very, very solid product which have been created. You look at something like Aave, something like Compound, something like Curve. You get something like Uniswap. You look at all these platforms collectively. We're talking about Uniswap making more volume than Coinbase recently. So you look at all this kind of stuff together and you say, well, wait a second. Okay, there's all the noise, which is like the DeFi noise, all the exploit for poorly executed contract or stuff which are pushed online too quickly, which get reverse engineered. And at the same time, you get this kind of massive piece of work which are there and which are building also in the background for the long term. Kudos to all these founders who have been doing that. And yeah, you can look at Aave and Stanley is doing all the project at the same time and trying to do many stuff as well. But the Aave platform, which was funny enough used last night on the reverse prism bug to do something quite elegant again in DeFi, is showing that it is built for the long term. And it's always the same thing. It's like you can see the frenzy happening with a short-term player who are just trying to, I would say, capitalize on the trend, and you get the people who are building because they are believers, and they are believing in the longer journey and the longer time horizon of DeFi, not just the 2019, 2022 horizon.
You talked about Uniswap having more volume than Coinbase, which I find to just be an astounding statistic that we've seen of late. I think a lot of that obviously has to do with trouble with banking rails and all of the regulatory things happening in the United States. But do you see a world where we really do make a wholesale move towards DeFi and centralized platforms become really diminished in importance in the background? Or do you think that they'll sort of be parallel rails for different people in different jurisdictions?
I think it takes time. At CoinShares, we always try to look at the way to in our research team to see how the human brain is not capable of completely appreciating the power of distribution of technology, because it's just like not built this way. And I think things like Uniswap and things like Compound and things like and Curve are really creating the rails for something new to come. But it's very difficult to perceive the full extent of it. Because of all the regulatory barrier or frameworks which are in place, which need to be adjusted and adapted around that. There's a big question in DeFi. The DeFi world has been striving on the absence of KYC and AML. You have now processes which are happening on DeFi to KYC wallet and make all this kind of stuff happening. So it's going in the right direction. Once again, like the regulator like to see a fully packaged product which is like finished and polished and ready to deliver. Like the technology innovation style, or technology-driven innovation, is more to ship fast and keep I would say reshaping and updating and upgrading over time. So the functionality get added over time. So we can see how we have now a DeFi environment which is becoming more or closer and closer to what a regulator will want to see. Obviously, the regulator keep looking at the V1. He's not going to be happy if he looks at a V10 or V12, he's going to be, okay, this guy are really going in the right direction. So it really depends where you put your cursor on what is the requirement from a regulatory perspective and what is the regulator looking at. Because the speed of innovation is so quick that by the time they finish review V1, you're already at V5. So it's a little bit of a kind of it's a bit unfair to some degree to the regulator, because they're not equipped to be able to assess that properly. And sometimes I think we are making ourselves a disservice as a community by not embracing the regulator more and not taking them on the journey with us. At CoinShares, we have a very open book policy with regulators, where we just invite them in and they say, okay, guys, that's the way we're doing it. That's the reason why we listed the company as well, because we wanted to be able to provide full transparency on what we were doing. We even offer a regulator sometimes to second staff inside our business to say, we're very happy for you to send us some of your staff so we can show them what it means to run a proper, transparent, regulated business in crypto. So as you can understand the commercial and the business side of it as well when you start to write policies and procedures.
It's interesting because you talk about bringing the regulator along. And I think our biggest problem was that we had the wrong person bringing the regulator along, because the environment in 2022 was seemingly much more favorable when SBF was being viewed as this hero and he was on Capitol Hill and taking meetings with Gary Gensler. And he was the last person on earth that we wanted to see be proven a fraud. because I think he embarrassed the industry, and I think he embarrassed the very legislators and regulators that we were hoping to woo to some degrees. I mean, you guys had $30-ish million exposure to FTX. Feels like everybody in some way did. How much damage did Sam do you think, to the regulatory environment? Mike Novogratz I talked to the other day, and he said 2 years. He said he thinks he set us back 2 years.
Yeah, I think it's 2 years. What I'm more concerned about is more bruising ego. Like bruising people is fine. Bruising their ego is something else, and it's always take longer. Bruising your financial statement as a company is one thing. Bruising your ego is another. And people tend to recover much longer time to recover from a bruised ego. So 2 years is definitely a right number. But if you look, what's happened with Temasek investment, they were one of the big investor in FTX, and all these guys are like, their reputation was on the line. A lot of people invested because they saw the Temasek brand on it as well. So this kind of like association is very damaging for them. And when it comes to the regulator, I think the regulator, wanted to get, a representative or someone they believe in to do the right thing in crypto. And, casting mistakes happen to everybody. So I'm not going to throw them the stone and say, you guys get the wrong horses in this race. Everybody makes mistakes. Question is like, are they going to be able to go over that mistake and restart thinking and say, okay, we need to find another champion and see, okay, who is going to be our, company or set of companies to help us navigate that? Because I still believe deep down that they need to work with businesses. They need to work with them to understand how to regulate this environment. Brian Armstrong had a very good analogy a couple of months ago when he was saying, please don't write this kind of policy in a vacuum. Don't lock yourself in an ivory tower. It's a John le Carré, quote saying the world from an office is a very dangerous place to be, and that's exactly what the regulator tends to do, because they don't go on the ground with the businesses to understand what are the commercial rationale and how things are running. So really having the business input, I think, is very, very valuable and very, very important. And again, at CoinShares, we always here to just give his hands and give you support when it's needed.
Yeah, I hate the sort of interpretation that because Sam was a fraud, the entire industry was a fraud. And there are people in the government that clearly have sort of taken it that way. And I don't know if, like you said, it's because their ego is bruised. I mean, Maxine Waters, Gary Gensler. I mean, there's pictures of these people with Sam, arm around them. That optics are everything in politics. So you have to wonder if they're just sort of overcompensating to the other side to punish all of us for sort of his misdeeds.
Well, the pendulum always overswing. So that was my theory, bless you, around the lack of regulation was always that if at some point someone get hurt, the regulator gonna overreact to that damage. And if it's a big institution getting hurt, it's one thing. If it's millions of retail taxpayer getting hurt, it's another story. And I think what we are seeing right now is like this overswing to the other extreme where everything is bad, and it will normalize. When Mike said 2 years to normalize, he's probably right. It's like you just need a bit of time to normalize and get there. But the pendulum, it's a Soros principle of reflexivity. And that's exactly what's happening here. It's like at some point you need to be able to swallow it and to digest it, and it's going to go through the system, and eventually we're going to come out of it stronger and in a better place.
I mean, you guys have been sort of at the epicenter of innovation in this space since almost the very beginning. As you talked about in 2013, you've created exchange traded products. We haven't obviously gotten a proper ETF in the United States yet. Are there things that are being built right now that you're still as excited about as you were at the very beginning?
Yeah, actually, it's funny because we were watching the merge last night with the team and like realizing what a massive progression it has been. You have got so many of these kind of Ethereum killer narrative, trashing Ethereum for years. And all of a sudden, Ethereum make this big mature move and transformation. which kind of reshuffle the card and say, okay, well, you better have a serious reason to kill Ethereum now, because they managed to do what is an incredible transformation. People tend to forget, but I think you get the technology aspect of it, which is very important, which makes stuff slow. But you get also the fiduciary aspect. You know, if this merge was not working, there was a lot of Ethereum stake which was at risk. So the way the Ethereum Foundation, I would say, for sake of a better word, and with all consensus, are managing that to make sure that, you know, the fiduciary element of that was fully respected and fully conserved, is remarkable. Is absolutely remarkable, and a proof that our industry is maturing in the right direction by taking care of its stakeholder, not just like doing thing for doing it, and like we will figure out the consequences later. So there's plenty of stuff keeping us very excited, you know, and what can be built in the future is just like incredible. So it's just about, you know, staying awake, and not like falling asleep because of the old regulatory narrative, and like zooming out and looking at the big picture, and believing, you know, like it's too easy to be focused on the micro element of it because we are on a day-to-day basis looking at it. If you zoom out and you look at it, it's quite remarkable.
Yeah, I think regardless of your view on proof of work versus proof of stake, you should at least intellectually be able to admit that that was one of the biggest technological maneuvers in history. It could have gone wrong in so many ways.
And, you know, we have some, you know, in the CoinShares research team, we get so many debate about, and because we get some very Bitcoin kind of like, I would say, maximalist people in our team, and we get some more EVM specialists, and you can see how the fruitful debate happened between them, and like they have very good argument on both sides, you know. And what, you know, but if you go beyond that, you know, you need to be able to realize, as you said, that, you know, from a technology point of view, which has been what has been achieved, is fantastic, is remarkable. And I think everybody in our team at least realizes that, and is seeing that there is some interesting thing there.
Right. And as we're recording this, obviously you've hinted to the fact that last night was the Shanghai update, which effectively allowed people to be able to withdraw. We've also, you know, alongside all of this roadmap and them sort of hitting their targets here, we've seen a massive move with Optimism, Arbitrum, Polygon, the layer 2 narrative, and ZK EVMs and all these things. Do you think we're seeing sort of a reconsolidation back into Ethereum as the main narrative? I mean, it seems like a lot of the shine has sort of fallen off of other layer ones as Ethereum has continued to innovate.
Yeah, I think well, that's not probably the house view. It's more my personal view, and like you have like I will be much more inclined to see a refocus on Ethereum and the layer 2, which are built on Ethereum. You know, there is a lot of things which are very interesting around the rollup. The rollup happening kind of unlock another level of innovation, and like allow to just like obfuscate things which were, you know, in clear before. So we're really going to another level of permissionless kind of debate, which is very, very interesting.
You talked about being on Aave last night, doing some sort of unique maneuvers that are only available in DeFi. So it sounds like you actually use this stuff and you dig in pretty deep.
We use Aave, we use all these kind of things, of course, but like we were more watching the exploit and seeing how people were very cleverly engineering exploit around Aave and the Prism update. You know, it was more like an illustration that not everything was, you know, perfectly fine. There was like there's always some little patches to make it to happen, and once the patch goes, everything is fine.
Yeah, I understand. So I want to talk about institutions. Obviously, we've sort of had the narrative of institutional adoption leading crypto upwards for as long as I've been here, certainly. And I look back at 2017 and it's laughable that we thought that was being institutionally driven when we didn't even have custody solutions for institutions and their coins. Do you think that we are seeing still this continued uptick in interest from institutions? Do you think that 2022, talking about that, unfortunately, again, sort of dampened that excitement? I mean, you guys are at the forefront of this. You're talking institutions, I would imagine, on a daily basis.
Yeah. So crypto market has this kind of unique nature where it's not built down from top to bottom, it's built down bottom up. So it starts with crypto retail and it goes up into institution, which is a very, very different journey, and probably why it gets so much resistance from institution, because that's not invented here syndrome. And if you look at the gold market, I think it was a big allocation from the institution, and then eventually the retail can get access, and that was a very different approach here. Now, what is interesting is like a lot of infrastructure were missing. As you mentioned like custody for institution was a big piece missing of the puzzle. At CoinShares, we realized that very early on, in 2017, I think we have $2 billion worth of crypto in our books. And we're like, okay, Xapo is shutting down, which was the only game in town at the time. And we said, okay, well, we need to get a proper custody solution. And that's where we partnered with Ledger and Nomura and said, okay, we're going to build a custody solution for the right, to address our need, which understand what are the requirements of financial company. And that was done. And by doing that, we saw how institutions were starting to be interested, because it was all about, okay, how do we check the very long list of, I would say, due diligence they have to be able to trigger an investment. At that point, right now, post 2022, yes, I would say the mood tape has been dampened a little bit, or the mood music has been dampened a bit by the kind of FTX damage, and especially by the, a lot of people took a lot of, I would say, cognitive bias by or validation by having big name like Cotu or whoever investing in this scene, and seeing all this kind of leader being hurt, kind of like slow down a little bit ambition of others. But funny enough, they were back talking to us much faster than we anticipated. So we thought it would be like an 18 months before we hear from anybody else at that point. And funny enough, come January, people were back calling and discussing and activating calls. So it's a very, very shorter cycle than we anticipated, actually.
You talked about that being in January. Now it's April, but has any of this been a result of the banking collapses and the large move in Bitcoin? I mean, anecdotally, I've spoken with quite a few people who are saying now we're finally seeing this flight to safety narrative for Bitcoin, and they're getting calls from unexpected people asking about that.
So it's an interesting point to raise here, and I'm gonna, we have we have this massive CRM where people share notes with us, and I have quite a lot of updates with my team, and I think one of our sales guy, which is like working very closely with the distribution network in Europe, raised back for the first time in his entire career with CoinShares, and he was with us since 2016. That's the first time I get an institutional client calling me to discuss Bitcoin and call Bitcoin like a safe haven asset. I'm like, okay, well, we definitely, maybe it's a one-off, and that's not going to repeat. But it feels like the banking crisis and all this kind of stuff, as you described. People say, oh, we get ETF, we get gold ETF. Say, where is the gold? Well, we get like 10 people in between, and like people like start to figure out, say, well, how do we get closer to our asset, and how do we start to remove intermediaries? And in a business which has been very intermediated over time, so the simple fact to remove a few of them is better than nothing.
Do you think that we have any chance of seeing a spot ETF in the United States anytime soon? I would argue no chance with Gensler at the helm, but that's my opinion.
I think the jury's out on this one. I think it will take a bit more time. You're right. I don't think it's happening overnight. I think you have I think Gary Gensler still have 2.5 terms left in his current term. So I think maybe I'm wrong, but I think you see it under a different SEC leadership.
Then I guess the next question is, does it matter? Do we need it?
Well, people will argue that there is already a lot of money allocated to things like Grayscale and other structures in the US, which, with the lack of an ETF, has done the job of an ETF. So, I think it's still needed because there is a lot of tax benefit linked to it. Like it's not like you can, if you look at Europe, which is more the CoinShares market, than the US on that front. If you buy our product in Germany or in Sweden, you buy tax-free, no capital gain. There's a lot of advantage there, especially if you hold it for a year. What if you just buy Bitcoin outright, you can't really get the same thing. If you buy our stake product, we have stake Tezos and stake Solana and stake other thing, other product. If you buy them and you get the staking reward paid out, because it's what we did was quite innovative, where we have zero management fees and we share the staking reward with the customers. If you buy that, your old tax problems are gone, because go explain the regulator, the tax inspector now that you get a capital gain on Solana, but you also get some dividend from Solana, which is only 3% or 5% or whatever number. So it's becoming very complicated, and it's become not very tax efficient. So there is some benefit in this product. They can be housed within your retirement plan, within your retirement accounts, and it's not like as simple as do we need it. It's like, what is the benefit of one versus not, effectively. And I think for the usual allocator and the person who is not a professional investor, who is just a self-directed investor, that has a lot of value, and it's a lot of peace of mind as well, because people are big advocate of, oh yeah, I can buy Bitcoin on myself and put it on my ledger, and I'm a big
endowments aren't doing that. Pension funds aren't doing that, right?
Yeah, but I'm a big supporter of Ledger, and we have a fantastic joint venture together. Pascal is a very close friend of mine, but at the same time, the reason we created bank is because people were mugged on the road traveling from one city to another, because eventually people know they were traveling with money. So the moment people are going to start traveling with the Ledger Nano or their other hardware device, in their pocket, what kind of insecurity trigger you're going to attract, and that's and that's a point where, well, at least your savings are in a retirement plan, in a product which is a MiFID security. It's a much more interesting value proposition than holding it outright.
Yeah,
and you're right. Institutional investors at scale, like endowment, it would be an interesting study to look at. I don't know how much Harvard endowment own outright gold in the safe at JP Morgan,
right?
Versus how much ETF. I never look at that actually, but it would be an interesting number to look at, to see how much real physical gold they have.
I would venture that most of it is paper gold, right?
I think it's correct.
Yeah, I would think so. You talked about the fact that you offer staking services, and we've seen sort of already SEC push back a settlement with Kraken for staking as a service. So does that concern you at all? I mean, for the products that you're offering, how do you navigate that?
We're not really offering staking as a service. It's more like we are embedding the staking reward in our product. So our product are priced almost like a total return swap, i.e. the price by the reward derived from the staking is already embedded in the price, which give it a very different aspect than staking as a service. So we didn't go the staking as a service route. We really stay on what we know, which is financial services, and find an elegant way to make it fit within a regulated financial services product.
So obviously the Ethereum merge and the Shanghai fork have been the major narratives of late. One of the other ones, and as I mentioned before, you guys were obviously affected, is that FTX has recovered $7 billion odd in assets, and they're considering turning the exchange back on. What do you make of that?
Well, I think I think the numbers are kind of moving a bit. It's a moving target, but I think the number was like 12 to 14 billion of debt outstanding at FTX. So if they really recover 7.5 or 7.2 billion, it means, net of, not accounting for fees or whatever, but we are almost like 50 cents on a dollar versus what it was. So I think the people who are buying claim did very well for themselves, because I remember seeing people buying claim for 2 cents on a dollar.
10 cents.
2 cents. I saw 2 cents on the dollar on the next day. So I think right now, all the offering, we're part of this massive distribution list where we see plenty of offering coming our way. I think people are buying anywhere between 15 and 30 and maybe 25 more than 30. But so it's interesting to see that the bankruptcy lawyer is giving out some numbers. The fact they want to reopen the exchange is very interesting. I'll be very interesting to see what's happening there and under which jurisdiction and under which brand as well. So it's food for thoughts, and with which capital as well, because obviously you're going to need to get a bit of capital to prime that to get going. So Be interesting to see that happening actually and see what the next step in that direction.
So I know we only have a few minutes left here. How much hope do you have that this market has actually bottomed and that we're recovering here in 2023 and things are going to continue on the way up?
I think there's a few stuff which are interesting right now. I think the market has been very much supported by the old banking narrative, as we discussed. I think the market is pricing a Fed pivot at some point or pivot at some point this year. So that's kind of what's supporting the market. What I would like to see personally is a bit more volume. It's like I still believe the volume are very thin and very weak, which doesn't give me the extra comfort I will need past the kind of, I would say, recent price action. I would really want to see more volume and, new current highs, I would say, or local highs on stronger volume will give me a bit more conviction that this is like a long-term thing, and we are like truly entering into this new dynamic.
This is how we know that you're a trader, right? At heart, we know you're a trader at heart when you're saying it's on low volume and it doesn't count.
Well,
that's my thought. I have a very similar theory. I just think that the moves are more volatile because the order books are thin and the spreads are off, and I think it's just a different market.
It's a different market. The CME is concentrating a lot of volume. Like the FTX debacle, make a lot of volume go out of the market full stop, and you get a lot of concentration on Binance and other marketplace. So the deck has changed dramatically on the derivative side, but I would just be happier to see more volume on the spot market. If you park the derivative market for 5 seconds, I would want to see more volume on the spot market.
I agree 100%. So I know you got to go. Where can people follow you after this conversation and check out everything that CoinShares is doing?
So CoinShare website, coinshares.com, CoinShare LinkedIn and Twitter page, and my personal Twitter page.
Awesome, man. Thank you so much for all of the insight there. Really valuable. This Ethereum narrative, I'm hearing it everywhere now, and I like it.
Well, thanks a lot, Scott. Talk soon.
That's dope.